Hey ForexMilitia, Parsival here, once again doing the weekly outlook for the week of the 5th to the 10th, and we have a short calendar week this next coming week. We basically have the Aussie on Tuesday. They are raising their rate by, what is that? 0.4? Yeah, 0.4 basis points. We have the IVPMI from the Loonie, and then nothing on Wednesday. And then Thursday we have the ECB coming out with their conference and their rate, and they're keeping it at 0. Unemployment claim. And then on Friday next week we have the unemployment from the Loonie, right? And we have the CPI from the US. Now the CPI is going to be pretty much big data because of the out of control inflation here in the US. So definitely going to be looking to see what happens with that. And I believe the week after that, on the 15th, we have the FOMC statement, and the federal funds rate. So that is some data that will actually probably go into the decision that they actually make in their 2-day conference over the federal funds rate that comes out next Wednesday. Okay, so that's the week, the calendar week. Let's go into the charts to see what we can see. Okay, starting out here on the dollar. The dollar basically is long. Okay, as you can see by the COT. This is saying that they're adding to longs and shorts. All right, but the overall positioning of the non-commercials is long. All right, so we saw it pull back to about, I believe this was a 38. Let me just take a quick look. Fall back to about 38.2. I believe that's what it was. Alright, yeah, somewhere in that range, right? And now it looks like it's going to take off and go higher. So I'm long. My bias is long on the on the dollar, on the US 30, on the Dow Jones. I am short. And let me see, should I zoom out there? Yeah, something is missing there. Oh, I see, there it goes. There's a super trend. Okay, so yes, I am basically short on the US 30, as the COT says it's short, and they're adding to shorts and reducing longs. So that's the non-commercials, and they're basically going in strong short, right? Interesting thing here is on the stochastic, actually on the stochastic and the TDI, which this is basically a glorified version of the RSI. Whenever it actually touches and goes to the oversold area, whenever it touches or goes into the oversold area, you basically get a bounce out of the area, right? Time again and again. So there is some technicals that are saying that there's a reason for this to bounce and climb higher, but I'm going to go with the COT report and the non-commercial saying that this is going to continue to go short. Alright, we do have some, it does look like there could be some retracement up into this area up here, but I'm going to stay short. On gold, gold is long, right? And with a heavy reduction in longs and reducing and a slight reduction in shorts. Okay, so right now gold is actually within this wedge here, and as you can see, it popped out, it broke out, but it rallied back into the wedge, and now it is basically coiling around this weekly support resistance line. So, being that this is long, most likely it will rally up into these areas up here where these highs are at, and so I am going to be long on gold. Now, there was something else that actually happened with gold. The treasury rates started to basically rise, and the market, of course, is falling. So it is looking very, very. It looks like gold really is going to rally as people look for a safe haven to funnel their money into. And then, of course, also is going into summertime, and that usually is a time when gold will rally. The month of July is a very strong month for gold. So, Bitcoin is neutral, and it is slightly weighted to the long side, but it's looking very, very. It still is looking very short. Like Bitcoin is taking a breather. So I'm going to be biased to the short side on Bitcoin. One thing it did do, it came down to, like you see this area right here, which is like a balance area, right? Where the tops and the bottoms of my indicators basically meet the oversold and the overbought, right? So it could basically coil around this area for a bit. You are getting some divergence here on the stochastic, but not on the TDI. So that's a departure. There's no confluence there. Okay. On oil is long. There's a couple of things going on with oil. Europe is looking to phase out Russian oil dependency. OPEC is looking to increase by a small amount their output, and basically it is to phase out some of the Russian oil. So the oil that is going to be lost by the Russian output, the Saudi Arabs are going to make up for that difference. And so oil, even with that, is going to be rallying. One more thing, the Shanghai lockdowns are being lifted. So oil is going to be consumed once again by I guess a high consumer of that product. Okay. So with that, we go into the loonie, and the loonie, I believed that this would rally last week. I'm not going to put that in, but I did put in that this would actually rally. Okay. But what it did was it fell down to the 78.6, and as you can see, it pretty much stopped right there. Now, a move past the 78.6 is a trend basically change to the downside. Usually this is like the support resistance line of any type of retracement, and would usually signal a bias towards a trend change. A trend change usually you'll see it if it actually breaks through the lows and creates a lower low. But this is one of the barriers that is in place where you can have a strong bias to a trend change. So as this is actually looking long right here, being in this wedge right here, right, coming and as you get higher, this was definitely a higher high. This closed above this one, so you got this low. If this breaks below here, below this support, this monthly support line, you'll see more action to the downside. But if it holds and you see a break towards a higher high, higher close candle for next week, then most likely I believe that it will continue to go higher. So I am actually bullish on the loonie. Once again, next week there will be an unemployment report that will come out on Friday, and the CPI at the same time. So that is going to affect this currency very huge. Okay, all right, so let's go to the euro. The euro basically is long, right? And they're adding to longs. So that being said, once again, that is counter to what is happening on the dollar, which is also long, and there is a negative correlation between the euro and the dollar. So if the euro actually does climb, go long, then most likely the dollar will fall and go short. Now, if the dollar goes long, then the euro should continue to go short. Now, as you can see, they're adding to longs, and with a heavy reduction in shorts. Okay, so it's looking like they are gearing up to actually bring this higher. Okay, and the pound basically is short, and they're adding to longs and reducing shorts. So that is looking like they're actually looking to gearing up to basically take this, or what could be happening is they're profit taking, and they're just balancing out their positions towards the long side. Some of the institutions may see some retracement up into the 50 or the 61, but the net positioning is still short. Okay, so with that'll be it. I'm not going to do the ruble because a lot of exchanges stop following the ruble, so there's no price action on that. So let's just go over to Trademiner, and if you like this content, please like, comment, and subscribe so you can basically see more of this content and support this channel. Okay, so now let's get over to Trademiner Picks of the Week for currency and stocks. See you over there. Okay, here we are on Trademiner Forex, and we have a bearish pound, right? Starting on June 8th and to June 30th, and we have an 83% win rate. And on the stock of the week, we have Intel from June 8th to June 29th, and we have a 80% win rate, which this says very low. It went off screen because of the long semiconductors line right there, right? And so let's get over to the chart and see what the setup looks like on the pound. It is down, and so what I'm basically looking to do is I am actually going to take this trade a little bit sooner. On the 7th, I'm actually going to just jump into this trade because it looks good right now. I have a crossover on my TDI, so I am going to go ahead and take this trade on the 7th and see if I can ride it down into these pivots here. So that would be, if I did that, I would take it to, let's see, 1, 2, 123, probably about here, about 120, about 121, somewhere around there. That would be my first target. All right, so let's go over to, let's get the stock of the week. And this one also, I might actually take this one just a little bit early because I have a crossover on my stochastic. So interestingly enough, and I don't have the pivots on here, do I? I didn't put the pivots on this one, so I can't really tell. But I'll be taking it around $43, going short. And with that, these both look like pretty decent setups technically. So let's go to the review. And I had a pretty decent week. I believe last week I was at 80 or I was at 90, so I'm up 4K. And interestingly enough, I had a huge trade on the dollar. That is outside. That was a trade that's outside of what I'm doing here, testing out Trademiner. So I took a huge chunk. I could have taken a huge chunk that would have put me way above par for this account, but I took a smaller amount because it started to pull back on me, and I didn't want to go into negative for a position that isn't part of testing the Trademiner software. So there you go. But we're up at 94 right now, and so we have I took some off of McDonald's, gold. This is a trade outside. This is a trade outside. This is actually a trade inside Amgen, and this is a trade inside the pound Swissy. These are last week's trade. The MACD is about, I think that's about 2 weeks ago. And Amgen I closed early. That was last week's trade. And there's the pound Swissy, and these are the trades I'll take this week. Alright, so that's an abbreviated version of the review, but yes, I am going to say knowledge is power, be power hungry, and power to the people. And once again, the closest thing to the Holy Grail is trading with the smart money. And so with that, this is Parsival signing out.